Commodities 2025, Asian UCO export landscape faces tightening amid policy shifts. Removal of 13% tax rebate tightens UCO exports. Biobunker, SAF growth fuels higher demand for biodiesel. Indonesia, Malaysia face tighter UCO supplies. Asia's used cooking oil export market faces significant changes in 2025 as shifting regulations and trade dynamics reshape the sector. China's decision to eliminate the 13% export tax rebate on UCO, effective December 1, is set to impact global trade flows, reducing export volumes and directing more UCO toward domestic renewable diesel and sustainable aviation fuel production. This policy aims to curb fraud and bolster China's biofuel sector, such as biodiesel like UCO. This move coincides with broader uncertainties in global markets, including the U.S., where the Inflation Reduction Act's carbon intensity-based credits remain unclear. The EU's anti-dumping duties on biodiesel imports further complicate the trade landscape. Meanwhile, countries like Indonesia and Malaysia are expanding their biofuel mandates, tightening regional UCO supplies. With these converging factors, Asia's UCO export market is set to experience a notable tightening in 2025, reshaping the industry's dynamics and trade routes. The U.S. Department of Agriculture, USDA, reported that China policy change would reduce fraud incentives and stabilize domestic supply chains. However, it is expected to raise export costs and may reverse the growth of UCO exports from China. China's broader biofuel strategy includes a 2025 SAF consumption target of 50,000 metric tons, requiring an estimated 3 million metric tons of UCO at least to meet a 2% SAF mandate. The country also plans to introduce an export quota for B24 biodiesel blended marine fuel in 2025 to help local biofuel producers impacted by EU anti-dumping tariffs. Market sources suggest that, while the tax rebate removal will disrupt trade flows and raise raw material costs, it may shift focus from raw material exports to finished products, particularly SAF, increasing export value. The booming SAF market, which is eligible for export to Europe without anti-dumping duties, presents a high-value alternative. In 2025, UCO export volumes will likely decline due to the rebate removal, boosting domestic supply and easing China's biofuel feedstock crunch, said a Chinese producer. Biobunkers drive UCO demand. China's UCO exports have dropped since August 16, when the EU imposed anti-dumping duties of up to 36.4% on Chinese biodiesel. High feedstock UCO prices and low profit margins, combined with anti-dumping tariffs, have made deals difficult, and this may persist into 2025. However, the biobunker market, especially for B24 biobunkers, offers new demand. The EU's expanded emissions trading system and the FuelEU Maritime Initiative set aggressive greenhouse gas reduction targets for ship fuels, increasing the need for UCO. Concurrently, the FuelEU Maritime Initiative has set targets for reducing the greenhouse gas intensity of ship fuels by 2% by 2025, 6% by 2030, 31% by 2040, and 80% by 2050. Singapore has become a major hub for Chinese UCO, especially after EU tariffs on Chinese biodiesel. The widening price gap between Straits and Chinese UCO has made the latter more competitive. Chinese UCO is preferred due to better pricing, and this trend is expected to continue, said one UCO trader. Increased biobunker purchases in Asia, driven by emissions mandates and carbon intensity indicator targets, have sparked optimism for UCO demand in Q1 2025 and beyond. Other origin scenario. UCO supply from major Asian exporters, including Malaysia and Indonesia, is expected to remain tight in 2025 due to their large waste oil potential as top palm oil producers. Indonesia's UCO sales may tighten further due to rising domestic demand, with UCO expected to meet 32% of its biodiesel needs. Indonesia has also mandated 1% SAF usage for international flights starting in 2027, alongside maintaining a 35% biodiesel blending rate, B35, in 2024 and advancing its B40 trial for off-road sectors. In Malaysia, Petronas plans to expand SAF production from UCO and palm oil mill effluents, POM, at a new refinery, operational in 2028, processing 650,000 metric tons per year to produce 700 million liters of SAF. However, UCO supply is hindered by traceability concerns. Futures and Options Exchange Bursa Malaysia launched a US dollar-denominated UCO FOB Straits, Platts, futures contract, UCO, in December. India's government is expanding its UCO-based RUCO initiative to meet a 5% biodiesel blending target by 2030. India's UCO market grew from 3 million metric tons in 2022 to 3.2 million metric tons in 2023 and is projected to reach 4.5 million metric tons by 2030. UCO is becoming a key feedstock for India's biodiesel initiatives and goal. However, with the growing demand, traceability and quality control will be crucial factors in ensuring a stable supply chain for biofuel production, said an industry source based in Mumbai. U.S. uncertainty. The U.S. market remains uncertain due to delays in implementing the Inflation Reduction Act's carbon intensity-based 45Z credit and potential trade tariffs following the 2024 election. A possible reduction in soybean oil's carbon intensity could lower UCO demand in the U.S., potentially redirecting Chinese UCO to Europe. The U.S. had been a key destination for Chinese UCO in 2023 due to tax credits for SAF and biodiesel producers. Platts, part of S&P Global Commodity Insights, on December 6 assessed UCO FOB North Asia flat at $990 per metric ton, with no disproving value and below an offer at $1,030 per metric ton. UCO FOB Straits was flat at $1,000 per metric ton, with no disproving value, above a bid at $980 per metric ton and below an offer at $1,020 per metric ton. Platts assessed UCO FOB North China up $5 per metric ton at $1,065 per metric ton, amid bullish price sentiments, above a higher bid at $1,030 to $1,050 per metric ton and below an offer at $1,110 per metric ton. UCO FOB Straits was up $5 per metric ton at $1,200 per metric ton, in line with higher indicative value and below an offer at $1,210 per metric ton.
Materias primas 2025. El panorama exportador asiático de
2025年大宗商品，在政策转变中，亚洲 UCO 出口格局面临紧缩，取消13%的退税收紧缩了 UCO 的出口。Biobunker SAF 的增长推动了对生物柴油的需求增加。印度尼西亚、马来西亚面临更紧张的 UCO 供应。随着监管和贸易动态的变化重塑了该行业，中国决定从12月1日起取消 UCO 的13%出口退税，必将影响全球贸易流动，减少出口量，并将更多的 UCO 引向国内。可再生柴油和可持续航空燃料生产。该政策旨在遏制欺诈和支持中国的生物燃料行业，例如 UCO 等生物柴油。2025年大宗商品，在政策转变中，亚洲 UCO 出口格局面临紧缩，取消13%的退税收紧缩了 UCO 的出口。Biobunker SAF 的增长推动了对生物柴油的需求增加。印度尼西亚、马来西亚面临更紧张的 UCO 供应。随着监管和贸易动态的变化重塑了该行业，中国决定从12月1日起取消 UCO 的13%出口退税，必将影响全球贸易流动，减少出口量，并将更多的 UCO 引向国内。可再生柴油和可持续航空燃料生产。该政策旨在遏制欺诈和支持中国的生物燃料行业，例如 UCO 等生物柴油。此举与包括美国在内的全球市场存在更广泛的不确定性相吻合。美国的通货膨胀减少法基于碳强度的信贷尚不清楚。欧盟对生物柴油进口征收的反倾销税使贸易格局进一步复杂化。同时，印度尼西亚和马来西亚等国家正在扩大其生物燃料规定，收紧地区 UCO 的供应。在这些共同因素下， 亚洲的 UCO 出口市场将在2025年经历显著的紧缩，重塑该行业的动态和贸易路线。美国农业部 USDA 报告称，中国的政策变化将减少欺诈激励措施并稳定国内供应链，但是预计这将提高出口成本，并可能逆转中国 UCO 出口的增长。中国更广泛的生物燃料战略包括2025年 SAF 的消费目标为5万吨，估计至少需要300万吨 UCO 才能满足 2% 的 SAF 求。该国还计划在2025年引入 B24 生物柴油混合船用燃料的出口配额，以帮助受欧盟反倾销关税影响的当地生物燃料生产商。市场消息人士称，尽管取消退税将扰乱贸易流动并提高原材料成本，但它可能会将重点从原材料出口转移到制成品，尤其是 SAF， 从而增加出口价值。蓬勃发展的 SAF 市场有资格在不征收反倾销税的情况下向欧洲出口，这是一种高价值的替代方案。一家中国生产商表示，到2025年，由于取消退税、刺激国内供应和缓解中国生物燃料原料紧缩， UCO 的出口量可能会下降。生物燃料推动了 UCO 的需求。自8月16日欧盟征收高达 3% 的反倾销税以来，中国的 UCO 出口量有所下降，中国生物柴油的 6.4%。高原料 UCO 价格和低利润率，加上反倾销关税，使交易变得困难，这种情况可能会持续到2025年。但是，生物盐体市场，尤其是 B24 生物盐体市场，提供了新的需求。欧盟扩大的排放交易体系和 FLEGT还是计划设定了积极的船舶燃料温室气体减排目标，增加了对 UCO 的需求。同时， FLEGT还是计划设定了到2025年将船舶燃料的温室气体强度降低 2%， 到2030年降低 6%， 到2050年降低 80%。新加坡已成为中国收入的主要枢纽，尤其是在欧盟对中国生物柴油征收关税之后。海峡与中国 UCO 之间不断扩大的价格差距使后者更具竞争力。由于价格更优惠，中国 UCO 是首选，这种趋势预计将持续下去。在排放要求和碳强度指标目标的推动下，亚洲的生物盐体购买量增加，激发了人们对2025年第一季度及以后 UCO 需求的乐观情绪。其他原产地情景包括马来西亚和马来西亚在内的亚洲主要出口国的 UCO 供应，由于印度尼西亚最大的废油潜力巨大，预计到2025年将保持紧张状态。棕榈油生产商由于国内需求的增加，印度尼西亚的 UCO 销售可能会进一步收紧，预计 UCO 将满足其 32% 的生物柴油需求。印度尼西亚还要求从2027年开始在国际航班中使用 1% 的 SAF， 同时在2024年保持 35% 的生物柴油混合率 B35， 并推进其在越野领域的 B40 试验。在马来西亚，国有计划扩大 UCO 和棕榈油厂污水泵的 SAF 产量，该炼油厂将于2028年投入运营，每年处理65万吨，生产7亿升 SAF， 但是可追溯性问题阻碍了 UCO 的供应。期货和期权交易所马来西亚交易所于12月推出了以美元计价的 UCO FOB Straits Platts 期货合约 FUCO。印度政府正在扩大其基于 UCO 的入口计划，到2030年实现 5% 的生物柴油混合目标。印度的 UCO 市场从2022年的300万吨增长到2023年的320万吨，预计到2030年将达到450万吨。UCO 正在成为印度生物柴油计划和目标的关键原料，但是随着需求的增长，可追溯性和质量控制将是确保生物燃料生产供应链稳定的关键因素。一位驻孟买的业内人士说，美国的不确定性，由于延迟实施通货膨胀减少法中基于碳强度的45亿信贷，以及2024年大选后潜在的贸易关税，美国市场仍不确定。大豆油碳强度的可能降低可能会降低美国对 UCO 的需求，从而有可能将中国的 UCO 重定向到欧洲。由于 SAF 和生物柴油生产商的税收抵免，美国一直是2023年中国 UCO 的主要目的地。标普全球大宗商品洞察旗下的 Platts 于12月6日估计， UCO 北亚离岸价持平至990美元吨，没有反正价值，低于1030美元吨的报价。UCO FOB Straits 持平于1000美元吨， 没有反正价值，高于出价980美元吨，低于1020美元吨的报价。Platts 估计 UCO FOB 华北地区上涨5美元至1065美元吨，至1065美元吨，高于1030美元吨的更高出价，低于1110美元吨的报价。UCO FOB Straits 上涨5美元吨至1200美元吨，与较高的指示价值一致，低于1210美元吨的报价。